It actually feels a lot better right now than it did at the beginning of so-called Liberation Day, when it seemed chaotic. Our hypothesis at the time was that there was a lot of negotiating going on behind the scenes. And when we saw Treasury Secretary Bessent really take over from Peter Navarro, that was an important moment. We knew the negotiations were perhaps about getting non-tariff trade barriers down, as well as getting tariffs down. And if that is where we end up, that's a tax cut. That's a positive. But as the turmoil was the inferno seemed to be blazing, I know that there was a lot of uncertainty just because of all of the rhetoric. But I think we're beginning to, understand now that this is more of a tax cut and a freeing up of markets. I mean, even here in the UK, I didn't know we couldn't sell our beef into the UK. Now we can, or our ethanol. So, and hopefully it's a two-way street that the U.S. is opening up as well. So it's a win-win for our trade partners.
That's the perspective on the trade story, but you used a key phrase, which is tax cuts. There is a bill and legislation going on through Washington, D.C. right now of further tax cuts, bigger perhaps than what Donald Trump had initially campaigned on as well. That is fueling concerns about a ballooning deficit as well. Give us your thoughts on that. There's a lot of folks who are saying this is not the time to be investing in the States, not just because of the volatility emanating out of Washington, but because of that ballooning deficit. How do you trade in that environment?
Well, I am a Laffer disciple, so the Laffer curve. And we have some evidence now. In the first Trump term, he cut the corporate tax rate from 35%. We were uncompetitive. A lot of companies were moving out of the United States. 35% to 21%. And of course, that faced a lot of criticism. Corporate tax revenues since then have gone from $200 billion to $500 billion as more companies relocate back into the U.S. We're more competitive now. So if tax rates are too high, then cutting the rates typically leads to more revenue. Now, one of the other things we think is going to happen, and consider the source, there is so much innovation taking place right now. Technologically enabled innovation. We think real GDP growth is going to accelerate well beyond what people expect now. So this idea of growing our way out of deficits, many people are dismissing that. I just gave you a very good example with corporate tax rates. And if you look in the United States at revenues as a percent of GDP, individual tax revenues, they're roughly around 18, 17% all the time. If tax rates go higher, people either stop working or find ways to shelter the income. So we think that government spending up closer to 24% is the problem, and we need to continue to show some discipline on that front.
Are there better opportunities inside the United States or outside of the United States right now?
It depends what sectors you're talking about.
Let's talk about technology.
Well, the wonderful thing about what's going on with artificial intelligence in particular is that the cost of innovation is collapsing. Our AI training costs are dropping 75% per year. AI inference costs 85 to, if you believe DeepSeek, 95% per year. So we think we are on the lookout for more innovative companies popping up in the rest of the world. I do believe the U.S. was at risk of losing innovation. Certainly under the last SEC chairman, Gensler, we almost lost the digital assets revolution to other countries. Now it's coming back. I think under this regime, technology in the U.S. will do very well. And one other thing I'd like to say about that, the Mag 6, many people lump them as technology and thinking they represent technology. They quintupled in market cap from 2019 to 24. If you look at the rest of what we call technologically enabled innovation, it was up a mere 30%. We believe the market in the U.S. is going to broaden out and reward some of the companies that have lagged badly.
Examples? Any examples? Which areas? Give me more specifics.
Sure. A lot of the multiomics names, they are AI enabled these days. Multiomics is life sciences. Yep. So CRISPR Therapeutics is curing sickle cell disease and beta thalassemia. We have, of course, Coinbase. It is starting to make a run. Palantir's had a magnificent move, just got into the S&P 500. Roku is the operating system for connected TVs, certainly in the U.S., and number 2 in the U.S., and now spreading around the world. We have other multiomics names like Twist Therapeutics, which is going to be critically important to the blood tests that are going to help us identify cancer in stage 1, or maybe even before stage 1, as tumors shed or polyps shed into the blood.
So basically, don't buy the Bag 7, look for other areas.
If we look at our portfolio, we have faced a tremendous headwind over the last 4 years, valuations coming down to roughly a market multiple as measured by enterprise value to adjusted EBITDA. We've worked with S&P on this.
Yep.
We were at 275% premium to the S&P. Now we're roughly a 10% premium. So if you ask us, again, consider the source, we believe that innovation, technologically enabled innovation in the U.S., away from the Mag 6, which have been rewarded handsomely, is highly undervalued.
Cathie, a lot of that innovation, though, that you're touting, and even just and you mentioned the SEC as well, the kind of change in antitrust sentiment as well, that is fueling the tech sector and the biotech sector specifically. A lot of that has come from expenditure coming from the government as well. And you kind of touted this idea that when you bring down some of these government expenses from a deficit standpoint, and kind of rein in that spending, at what point does that start to hit the innovation ecosystem that you're talking about?
I think that innovation is part of the program, and especially with Elon Musk at the helm. He has been at the helm. He's going to be stepping aside. I think he has been shocked and has surfaced how old the technology is and how inefficient it is and how much we are doing manually. So I think
at government.
In the government sector, we've had Palantir go in, starting with the Department of Defense, and now it's moving into other parts of the government and increasing efficiency enormously. We desperately needed this. Some of these systems were 50, 60 years old. And so if we look at the FDA, for example, we're already seeing more transparency and streamlining, which is absolutely essential. Deregulation. Regulations have been strangling innovation in the U.S. The FDA already has approved, for the first time, a piece of software code which will help in the diagnosis of heart disease. Is getting rid of animal testing because it doesn't work when it comes to monoclonal antibodies.
But Cathie, some of the examples that you're giving, you mentioned the Defense Department as a great one, DOJ as another, I'll add a third, which is the FAA and a potential transformation there. That all requires investment in the infrastructure and the technology that you're talking about modernizing. And yet we've seen the Trump administration pull back on some of those federal contracts and that defense spending. I think Palantir is actually one of the few exceptions that you're seeing for that rule. Do you really expect that to continue, given the pullback on that spending?
Well, having watched from Poland personally on an on a base, it was an army base actually, them training the Ukrainians, we've learned that war is changing. It's becoming much more electronic. And our systems, we call them the primes, the big defense companies, they produced elite equipment. The world's going towards commoditized when it comes to drones. And, of course, in Ukraine, they've been using DJI drones. And we've been learning a few a few things about them. So we're spending too much in the wrong places as technology changes the nature of war.
Are big tech companies spending too much in the wrong places? This huge investment that we're seeing at the moment in AI, is that going to be able to continue? At the moment, the conversations I'm having with people are talking about costs crashing, and you kind of obliquely referenced this a little bit earlier on. Costs are coming down. Are we certain that all the investment that we're seeing at the moment in big tech, in AI, is being spent wisely?
No, we're not certain. We're never certain. Whenever you see a flood of capital moving into one space, which it has, one of the things we think about is software as a service. Internally at Ark, there's something called vibe coding. I don't know if you've heard about it, but we're all coders if you think about it. Natural language processing, vibe code. We can go to ChatGPT or Claude.
Write some code for me.
Yes, and say, build me this website. And it will happen. Or
who makes money on that? We still haven't figured out who's ultimately going to be making the money.
We're going to, because we're going to lower our costs.
Okay.
We're going to lower costs. We're going to eliminate.
But that's not what's priced into the market right now. At the moment.
No, I think the biggest. So there are three huge areas. One is massive productivity gains that every company can enjoy. That's one, and you'll see that more in efficiencies. Two is the largest AI project on Earth is autonomous transportation, whether it's robo-taxis. So Tesla, we have said for quite some time, is the largest AI project on Earth. The most profound AI applications are going to be in healthcare. If you think what makes AI tick, it's data. We have 37 trillion cells in our body. That we're now analyzing, and we can analyze because of AI.
At the moment, the market is pricing, giving the big multiples to the companies, the picks and shovels companies, the companies that are making the AI, the companies that are making the data centers, the operators of the data centers. That's where the valuations are at the moment. Are those on the wrong valuations?
They've corrected quite a bit.
Sure.
They've corrected quite a bit. I think the better question is, are some of the opportunities I just mentioned, especially in healthcare, are they recognized at all? They are not. They are not recognized at all.
Cathie, speaking of the healthcare story, there's a question here, and I know you specialize in kind of biotechnology specifically, but I know that you also have in previous iterations of your holdings talked about other pharmaceuticals as well. There's a question right now, especially in the European market where so many people are holding pharmaceuticals and biotech as well as part of their portfolio, of what a tariff impact or reciprocal tariff impact may look like in terms of the raw materials needed to develop that kind of innovation you're talking about, but then ultimately passing on the cost of that technology to the consumer. And I know, again, you're speaking to a very kind of innovative sector or piece or kind of cross-platform or cross-slice of the market. But I'm curious about what that does to margins, what that does to the actual costs involved with creating something. As I'm looking at your holdings in Tesla, Palantir even, I'll throw CRISPR Therapeutics in there. Walk us through the margin story with the context of things might be getting more expensive in the short term.
We think the healthcare sector has the opportunity here to take returns on R&D, which are in the low single-digit range, way down from the golden age of the 80s and 90s when they got up to 20, 30%, back to 15, 30, even 40%, because AI is going to collapse the cost of drug discovery and development. We think the number of years it will take to discover and then launch a new drug will shrink from 13 years to 8 years. We think that we're going to have molecular diagnostic tests, as I mentioned before, to diagnose disease much earlier. And so we're going to move from sick care spending, which in the U.S. is 85% of healthcare spending, more towards therapies that actually cure. So if you look at CRISPR Therapeutics and others, we think that the combination of sequencing technologies, artificial intelligence, and CRISPR gene editing is going to cure more diseases. We're already seeing cures in sickle cell disease and beta thalassemia, as I mentioned. They have one that will compete with Lipitor or the statins in the works right now, which is showing amazing results. Again, once and done, not having to take statins all your life, which have all of these side effects. So I really think healthcare is the most underappreciated beneficiary of AI out there. But as you mentioned, your viewers have a lot of pharma holdings. You have to make sure that they are harnessing these tools, because the old way of doing things is not going to work anymore. It's very inefficient. There's a lot of guesswork.
Yep.
And technology is going to change that. You have some great pharma companies, but they have to harness these tools aggressively. Otherwise, newbies will come around and nipping at their heels, it will seem like, and then surprise.